All right, so today we are going to do a video to kind of get to know another one of our carriers, ShoreOne. We've got Ben, the marketing rep over at ShoreOne, and really excited about this one. They've got a really unique product that's been very helpful inside of our agency. So excited to spend some time with him to learn more about them. So Ben, I'll let you introduce yourself.
Hello, everybody out there in internet world. I am Ben Hoover. I am the Chief Marketing Officer here at ShoreOne. I've been on board with our team for about a little over 2 years now. We launched actually in 2019, but I came on board to kick us off and write our first policy. So I sit in the Carolinas, but so that's where obviously how I've gotten to know the team here. But we're in 4 states. We're headquartered in Boston, Massachusetts. We have underwriting teams in Florida and all over. So we're kind of a modern day MGA.
What kind of give me a little bit of your background before joining ShoreOne?
I came in in the field marketing side for a program that was a risk that I knew pretty well, and got some granular territory experience in the Southeast and Eastern Seaboard. Really cutting my teeth and learning, package and field underwriting for specific risks. And then through a few acquisitions later, as the market's been the last few years, I ended up marketing regionally for a major wholesaler in all that they did. So I kind of got a great perspective of the full personal and commercial lines marketplace and product offerings that are out there. And like I said, dipped my toe in and started picking up a few letters after my name. It really was a fun way to evolve my career until and the production underwriting side all over. I kind of touched every single role except for the retail side at this point. And then about 2.5 years ago, some colleagues that I've known in past life reached out that they're putting together a project of what would eventually be ShoreOne, to try and fill a need that they saw that does it most definitely exist in our industry, of full flood, to bridge the flood gap that exists in homeowners policies. And I was like, this is exactly what I want to do, because it's a chance to bootstrap and start up a new product that had never before been launched.
Tell us a little bit more about what makes ShoreOne unique.
Sure. The idea for ShoreOne was kind of happened around 2012, back in the Superstorm Sandy days. I almost said a hurricane, but they actually had to change the name because of deductibles and all the things that we're doing nowadays. But our executive team was with a different carrier, and they saw how when Sandy slammed into the eastern coast of New Jersey and New York, all those homes were obliterated. But they found FEMA and NFIP adjusters began arguing with homeowners adjusters as far as what was the trigger, and it kind of became an issue of concurrent causation in our industry. What was the actual cause that obliterated that house? And the insurers got the short end of the stick on that, because there's still some claims that are being processed 13 or 11 years later, I should say. So the concept was born, why can't we just create on one form? Because forever, the HO form has just always excluded flood. It's a peril that's not really been able to, there's too much exposure there. But for true coastal risks, with the evolution of actuarial science and modeling, we now can model for flood, for storm surge flood, and a lot of, cat surge, cat flood. So was born the concept. Fast forward a few years, that company was sold, and it was not really a product that was picked up. So it kind of sat on the shelf for a while until, again, circle back, 2018 or 2019 is when the team sat down and let's do this in earnest to create a full limits flood endorsement onto an homeowners policy that is admitted in the states we're writing.
One of the things that it really has been a huge benefit to us is just exactly what you're talking about, being able to simplify things where, hey, instead of having to worry about a base flood with FEMA or even a private carrier and then stacking an excess flood policy in addition to a home policy, just making it simple by putting it on one policy. Tell us a little bit about the backing of ShoreOne and some of the securities that an insured could feel comfort in.
So many insureds nowadays are asking these questions, and I love it. Like, what is the financial position of their carrier? Because so many have been disrupted by non-renewals or insolvencies, and not even just in our state of South Carolina, up and down the coast. So it's a completely valid question. Being that we are an MGA, we're fronted. So our writing partner is American European, who have been spectacular partners of ours. They're predominantly a commercial lines writer, regionally Northeast, but and have not dabbled much into personal lines. And based on prior relationships, As such, we are responsible and do a very diligent job of building out our back end reinsurance structure. Thankfully, we have a lot of good things going for us. We don't intend to ever enter any of the problematic states that have gotten a lot of these carriers in trouble, of Texas, Louisiana, or Mississippi, or Florida. And it has made us much more appealing, I think, in the reinsurance space as we take it to market again this year. Gain more capacity every renewal, which is very difficult in a hardening market, as you can imagine. I think it bodes really well for the future that we have taken a very, very, very granular approach to writing the right risks, to writing risks that are coverage focused versus price. Fast forward 2 years, and I'm hearing, oh, thank goodness you're still around. And now we're competitive. We do protect ourselves very well in reinsurance. It's an evolving process. As we grow, it's important that we adapt our reinsurance structure to reflect that, and we have. It's important to know that our primary writers on our quota share treaty, which is not something that exists much anymore, are first dollar, and they're the largest reinsurers in the world. It's your Munichs, your Arch, your Renaissance Re, and 90 billion plus in assets. So every insured that has a ShoreOne policy is protected first dollar by some of the largest reinsurers in the world. And we're very transparent about that we lean very heavily on those relationships. They, and so there's deep pockets to pay those claims.
Your average insured is going to necessarily understand, but
Yeah.
Just kind of putting that into terms that someone might be looking at those carriers that he mentioned, the Munich, the Arch, those are the ones that pretty much all of the big boys, the name brands, are protecting themselves with. And one thing that I always describe to my insureds when I'm talking about it is it's insurance for the insurance company, and where it's important for you to have a strong insurance carrier backing you. It's also important for that carrier to have a strong insurance carrier to back them. And that's what ShoreOne has done. And one of the reasons we decided and wanted to work with them is because of the fact that they are approaching this responsibly. One of the things in the insurance agent world is there's always carriers that are going to come in and try to buy the market, is the term that we use. And what Ben mentioned about the fact that not always the cheapest rate, which is a totally separate conversation that we'll have one day, but that's honestly extremely reassuring, because of the fact that you're coming in, you're competitive with what you want and what you need to be, so that way you can be there long term. And ultimately, that's what's going to cost insureds or save the insureds the most, is having a strong product that's there year after year, instead of let me get a cheap rate for 1 or 2 years and then see a 35-50% rate increase.
And that's exactly it. I mean, if they come in and you get market share, and then next thing you know, you're right, it's just a series of years of 20-25% rate hikes just to try and stay up with inflation and the market adequacy, where I think we have the luxury of being able to get in front of that, set the bar, and tweak and model accordingly. People ask us, how can we write $1 million in flood limits for so cheap as an endorsement? And it's along those lines. It's kind of fascinating if you think about it, because you can't lose the same risk twice in the same event. I mean, so if a storm hits, something's going to destroy that house. So the additional premium from our flood protecting for that peril actually really, really helps our book, and it helps our the modeling and the way reinsurers see our profitability. So it's really echoed and resonated well our desire to provide the broadest coverage for the price. So
I like that. I hadn't thought of it from that point of view, where talking about you can't lose the same risk at the same time. So that definitely resonates and makes sense there. What as ShoreOne's looking to the future, what are some of the things that ShoreOne's wanting to do long term? Maybe footprint, or becoming their own writing carrier. What are some of the things that might be out there for ShoreOne?
Combination of a few things. I think product evolution. We've had a lot of our agents express that, in order to retain and round out accounts, other lines such as umbrella or and things, I think that you'll see that coming in the line. We have a very strong appetite for new construction, so I would not be surprised to see a builder's risk or something of the sort come in on the front side of our product, so we could write that with flood. which is very difficult to place in a flood zone because you have to get a before and after elevation cert nowadays, and all risks being built today are all subject to the NFIP's new 2.0 guidelines. And so there's no grandfathering anymore. They're just getting whacked right out the gate with the ultimate glide path. And we can successfully write those risks much cheaper oftentimes. So I think you'll see that on the product evolution side. Footprint, you named it. We are just actually this month got approved in Massachusetts. So that'll be our 4th state. We're currently writing in South Carolina, New York, New Jersey, Mass. And we'll probably round out 3 or 4 more states on the Eastern Seaboard to evolve our footprint. I don't know, we probably won't go much more beyond that. We're not going to be an inland writer, at least not on this program. I wouldn't possibly put it past us to evolve to several markets, offering several there are several carriers, I should say, or offering several products inside our portfolio, because that model has been pretty well proven as of late by some MGAs, and I think everyone can attest to that in our region and around. So that's the goal. But I think we really want to get really tight on what we do well first. And I mean, there's so much unwritten premium outstanding in the flood market nowadays. I mean, private flood is barely scratching the surface. So I think really the evolution is going to be writing more private flood. And the NFIP has made it very clear that they're pushing to privatize flood. I mean, as evident by the rate and form changes that are coming through. The FHA, has approved now private flood to be eligible for compliance for mortgages now, FHA mortgages. So there's a lot of tailwinds to private flood that I think is going to be the main goal of us, is to increase our flood uptake. And
that's awesome. That's awesome. What if there's anything we hadn't talked about at this point, what else is there that you would want a potential insured to know about ShoreOne?
We're very selective in who we distribute our product through. So I think our main goal is if an insurer is getting a ShoreOne quote, they can rest assured that the agent providing it is coverage focused. They're not trying to shave down a quote to beat someone. They're going to provide that insured with a very solid offering. It's something that has been very important to us. So to know that we are distributing responsibly, to know that we are keeping our finger on the pulse of how the market's changing, so we don't have to slam through giant rate increases left and right. Things like that. We want to be great custodians, and our goal is to be here long term. I know it's very cliche to say, but we've seen, you said yourself, the people who come in and gobble up market share, and then an event happens and unfortunately they're out the next day. So that is not our goal at all. We are designing this to be a long-lasting program. We have a lot of experience in our executive team doing that, and I think it's going to be a great thing. Our biggest hurdle now is just brand awareness, and that's why I appreciate you having me on, because my goal is to just spread the word on us and private flood and the need for admitted flood in the marketplace, and that's our cause that we're championing right now. So. But
that's awesome.
We welcome all insurers, anybody in our coastal 7 counties in South Carolina and New York and New Jersey to give us a run, because that's what we're trying to do.
Yeah, and with that, if that's something that you want to take a look at for your home, obviously Mappus would love an opportunity to take a look at that for you. If you're current insured and you have questions about ShoreOne, please let us know. If you're not a current insured and would like to take a look at ShoreOne and Mappus, we invite you to fill out the form. There's probably gonna be a link below this or included on a comment or something like that, where you can learn more about Mappus and ShoreOne and request a comprehensive review of your current insurance. So thank you so much, Ben, for taking some time to hang out with us today. Thank you for those who watch this video. If you have any questions, feel free to reach out. And thank you so much for taking the time to watch this.